All right, the monthly inflation data has just dropped. Let's go live to Ross Greenwood, our business editor. Ross, bump up 6.8%. Talk us through this figure. We know monthly is a bit more volatile, so I'll just preface it with that. But how is this figure going to land in terms of interest rates, crucially?
Yeah, and you're right to say these do bump around because it picks up only around 2/3 of the items that are in the quarterly consumer price index, and so therefore can be subject to revision. There's something else in here as well, and if you go back pretty much 12 months ago, you might remember that the previous government had halved the fuel excise to try and take some pressure off fuel prices at that time. Well, that's now unwound, which has added to inflation. So as a result, the inflation rate has jumped, as you can see here, from 6.3 to 6.8%. But do bear in mind a couple of things here. And one is that, many economists had already factored in those changes that I was talking about, including the fuel stuff, and thought that it would come in at 6.4% was the consensus. Now, plenty of economists have also indicated that if the inflation number, the monthly inflation number, but looking back over a year, came anywhere near 7%, it meant that an increase in interest rates in this next meeting, the June meeting of the Reserve Bank, would become live. Now, you've played a little bit of Philip Lowe from earlier today in his testimony to the Senate estimates. There's other bits and pieces also that have come through this as well, just really in regards to where inflation goes, where wages go, that's going to be pretty much key into the future.
We've increased interest rates a lot. Monetary policy is restrictive and it's working. And whether we need to increase rates further will depend not only what happens with unit labour costs, what happens with the global economy, with inflation expectations, consumer spending. So they're the variables that we're looking at.
Now, in that testimony this morning, he also indicated that rents are going to be inflationary for Australia, could potentially peak out at more than 10%. Just noting here from this monthly data, Tom, housing basically is around, you can see here, going to be some 6% of it, but even housing in total was up by 8.9%. The other categories, look at the electricity there, up by more than 15% there. So you can see that there's still pressure, even though there are some areas, including fuel, was high, but that's artificial because of the reversion back to having the excise on it. Food and drinks is one of those things that, of course, people just can't avoid. You got to eat, you got to drink, and so really that inflation is really hitting the hip pocket of ordinary Australians who are not only paying with these higher costs, but also on top of that the interest rates as well.
And because this is an annual figure, we know fuel prices went up ages ago, Ross, but the point around that is previously we had an extra month of that fuel lower price in there. So that was that last figure in March, fuel was negative 8.2%, so up to 9.5%. Your point is economists knew that. They were still thinking it was 6.4 at 6.8. There's also, I know there's so many ways to read this. If you strip out some of the volatility and on holiday travel as well, 6.5, it goes down from 6.9. So a drop, if you like, a less volatile figure on that.
Yes.
After we throw all of that at the wall, Ross, what's your prediction? Is this now a rate rise from the RBA?
Well, it's certainly on the agenda.
Is it a bit too complicated?
No, that's not Tom. It's still going to be very much on their radar. I want to show you a couple of bits and pieces here. Let's have a look at the markets. That'll give us a hint as to whether there's any mood change, particularly in the markets. If we show you here, say, for example, the ASX 200, look at that. Right on 11:30 as this number came out, what happened? You suddenly saw a sharp dip in the market. So that's the surprise that's hitting the market at that stage. And have a look at the ASX 200 now down more than 1%. If we go a little bit further forward, we can see another chart that we've put together for you, which is 2-year government bond yields. And this particular one will also show a big jump, or in fact, they're up a little bit from where they were previously. They had been down, now higher. So again, this just indicates that the chances of the Reserve Bank moving again at that June meeting have now increased. It's not to say that there's an odds-on chance or they're certain to go or anything like that, but it just means there will be a conversation at the Reserve Bank board about whether there is justification now to keep those interest rates moving higher in the face of what seems to be persistent inflation in Australia.